All right, welcome to 2026, Deduction Desk's second year in the running.
Let's go.
We're looking to do a lot of creative things with this channel. We're looking to potentially upgrade our whole studio area here.
Yeah,
we got a lot of
double
exciting stuff.
Our subscriptions to 200 people.
Yeah. And then we'll do the top comment if we get that amount of subscriptions. No, I'm just
Do put your questions and stuff in the comments.
Yeah, 100%.
We get DMs, we get texts to me directly from people who know me. Please, if you can,
ask
a question.
Ask some questions, right? That helps with the content. Content maybe you want to see, add it. But it's a new year, right? And with a new year, we still want to stay in the same path of how do we plan properly? And I think starting in January 1, it's kind of that restart, right? Restart for your business, restart for you as an individual. Some of you guys have spent 3 weeks at the gym and that'll be the only 3 weeks you spend all year. Right? But you're changing what you're doing. So what we want to talk about is now that the January 1 is here, or the new year is here, we're in January of 2026. Some of us may have cash sitting in our business account. Some of us may have money that we said, oh, you know what? We've appointed the money for our taxes. We've made expectations as far as what we need to contribute. Now this money is just ours, right?
This is the profit, right?
Is it?
Yeah,
or is it not,
good
right?
Question.
What are the things that we can still do in January 1 to make sure that we're hitting off the year the right way?
Yeah, some of the questions
that's what we're going to talk about.
Some of the questions we always get, right? Like let's assume you did everything right. You took our advice and you did all your tax planning in November, and by December you issued all your outstanding checks and you brought your profit down and you took whatever bonuses you needed to make and you have a general idea of what your tax liability is going to be. One of the biggest questions we get is, okay, now what do I do with the rest? What do I do with the profit that I am okay paying tax on because this is all that's left? And we want to go through some of those steps, and we also want to talk about like what is actually the cash you can take out and how much should you be leaving in there for future planning, liquidity, budgeting, making sure everything's paid off, and just general guidelines for you to know so that you're not, just rushing to take a bunch of cash out and then only having to put it back in when finances get low again in the business.
Yeah, so I think, if we're going to put it in a step-by-step process, first step, I think, more than anything is, do I have enough to pay my federal income tax? Do I have enough to pay state and local tax? My payroll taxes.
Estimated tax on January 15th.
Yep.
My quarterly payroll fee on January 20th. My sales taxes. Those numbers should be figured out and known already. Or if not, you got to do it before you start taking cash out.
Right, 100%. I mean, especially when you're scrambling in October that you thought you were going to have, you didn't have. Yep. And now all the money that you spent, which you thought you were going to make up for taxes, isn't there. Right? Yep. Start the year off right. Put it aside. If you have everything set correctly, get it done in April, right? If you're a business owner, don't push it to October. Get it done in April. You can start your new year, and then worst case next year, you can extend it if you want to. So definitely first step there.
Also with that, it's pay the minimums, right? If you have a $50,000 tax bill that's projected for April 15th, but the minimum you need to pay by January 15th is $10,000, why would you pay all 50 if you don't have to? Take the extra 40 and don't take it out of the business, don't go spend it, but put it into something safe that's going to make you a little bit of interest, make you some dividends, something that's liquid, that's easy to access, that's paying you to not overpay and give an interest-free loan to the government. So once the tax planning and your immediate tax requirements are figured out, and more or less that's your accountant's job to tell you those things if you don't know what they are. The rest of it, now we can start thinking about the fun stuff.
Yeah, and I think, to kind of take that to the next level, like what is that extra cash, right? So we're an individual business owner, we own a business, we have extra money in our account. What type of money is that? Is that operating buffer, right? If that case, we're using it for liquidity and stability moving forward because we need that extra buffer in case February isn't the month that we thought we were going to have, or March isn't the month we thought we were going to have. Is it growth capital? Is it just pure growth from the year before, right? Well, now we can start looking at, do we want to invest it to turn 10 into 20, 50 into 100 over a period of time? Or do we want to use it for expansion? Do we want to buy another building? Do we need to buy another truck? Do we need to hire another employee?
Your kids'
because they're expanding, right? All of those things are things from a capital standpoint that are important. Is it owner profit, right? Is it actual profit for me as the business owner? Everyone's paid, taxes are paid, quarterly estimates are paid, and now it's my money, right? I think think it's always important for you to make sure that you're paying yourself just as much as you're paying everybody else. We can all get caught in this rat race of we need to make sure the business is doing well. We make sure the business is well. We need to reinvest. And then 5 years later, you're stuck with paper money, but you as yourself are not really thriving the way you want to. So if it is owner profit, do you pay it out in compensation, right? Do you pay yourself? You talk to your accountant about how you pay yourself and what the most beneficial way is to do that. Or do you put it into retirement, right? Maybe there's other opportunities even in the new year where we can start putting into retirement or profit share into previous years, right? And we'll get into that. But misclassifying this is how you create cash flow problems in your business.
So the first thing that we would want you to take away is the year is over. You can't do any more tax planning in 2026 for 2025, aside from one thing, which we'll talk about in a second. But 99.9% of the things are done. You can't go buy a piece of equipment now and take the expense for last year. You can't go pay a vendor who sent you an invoice on January 1st, but he performed the services on December 15th, right? Those things are kind of gone. But what you can do is you can still fund your retirement accounts. If you have a SEP IRA that you typically do or that you have plan on doing for this year, you can do that. You can do a defined benefit plan if your income allows it and there's enough excess capital left over. And most importantly, and this is a case-by-case thing, is the solo 401ks, right? We have that as an option too, where you can fund those. It just depends. And I think you
you could send in a solo K, you could profit share from the previous year if it was established. Employee contributions are a little bit difficult because based on the Secure Act, they need to be in the year that you actually made the income, right? So we're kind of past that point. But as a business, if you want to profit share for the benefit of your employees, which is solo K is only you, then that is something that would be doable. But even if you don't have a SEP IRA, you can still set one up all the way into April 15th when you file your taxes, or obviously into October. I think SEP is April 15th specifically. So those things are things that you could say, look, I haven't saved for retirement, or I want to start saving for retirement. All of those things are things that excess cash can go into, where you're not necessarily paying yourself and paying taxes, but you're actually doing the opposite, paying yourself for later and saving taxes.
Right. There's probably things you also thought about at the end of 2025 where you're like, I could use this, I don't need it. Maybe it was a new car. Maybe it was a big industrial machine. Maybe it was that fancy computer that you were thinking about getting, but it just didn't make sense at the time because the RAM prices were too high.
Right.
So these are things that now you have time to make that decision, and you should probably set some cash aside for that. It's like, hey, I would like to spend $15K to re-outfit the office with new furniture. Okay, so maybe I don't want to take out that money now. Instead, I want to wait for the right deal, find the right thing. And now you have a whole year to plan it out. And those things should also be at the top of your mind before you start paying yourself.
The only thing underestimated or undervalued is actually doing a year goals planning, right?
Yeah.
Sitting down and saying, what did I do last year? What is going to help my business grow more than I did last year? And what are the actual expenses or monies that I could be spending to make sure that happens? So
yeah, and actually Joe made us do that when he first started working with us. He was like, all right, he's like, we want to be at this revenue number. And we're like, shut up, Joe. That's like not going to happen.
Not real.
And then every year, like we're like,
oh, actually, we might hit that.
We're probably going to hit it this year. So doing those things and setting these arbitrary numbers, which seem out of reach, is a great way to kind of benchmark where you want to be.
Well, I think, and it's important, right? Because if you have that number in the back of your head, and maybe it's a shoot for the stars number, maybe it's a decent number in your mind, but as you're starting to do that, I think subconsciously, every move that you make is geared towards getting you closer to that number. Mm-hmm. So whether you realize you're doing it or not, you have that number in the back of your head and you realize, you know what, maybe we should do different furniture for the office because these employees are going to work harder because we're putting more money into it. Or the clients are going to want to come here because they see it's a better atmosphere. Now more clients are visiting the office than they did the year before. So goal planning for the year, and it's not too late to do that. I mean, it's January 14th.
I would hope.
It's not, you don't have to we'll have to wait till next year to do it, right? You can obviously do it this year. But look at those things. What are things that you wanted to increase? And then look at that cash that you have and say, what is going to make me the most benefit?
Like for us personally, like there's definitely decisions we made where we hired people specifically because we had this stupid number that Joe put in the back of my head, and I'm like, well, how am I going to be able to service all those people? Like, well, we're going to have infrastructure. And it kind of starts making that, something out of grasp initially more of a reality. And you start thinking about doing things that don't necessarily put more money in your pocket today, way, but it'll help you when you're at that number.
Yeah, it's like Inception. I went in and spun the dreidel, and then he just started spending money on shit so he could get the business to where it needs to be. But those are the things that you as an individual business owner, what am I trying to hit, right? We're not just making money. Those of us who are entrepreneurs want to get to the next level, want to achieve the next step. And it doesn't even have to be monetary. It could be, the amount of clients that you have.
Or
it could
lifestyle,
be lifestyle that you want to have, right? The hours are reduced, whatever it is. So those things are obviously things that are important.
Yeah, and then something that kind of ties in with that very naturally is what you're investing in then, right? It's like, okay, I'm on board. I want to get to, 10x what I'm doing right now. I'm ready to do it. Okay, well, you're not going to get there by buying a G-Wagon for yourself, right? You're not going to get there by, I guess maybe you're impressing people with it. You're not going to get there with making frivolous purchases or taking a bunch of cash and putting it in your personal trading account, right? It's investing into your revenue versus showing deductions so that you don't have to pay more tax, right? And if that's the steps you want to take, that's the next thing you need to think about before you start thinking about paying yourself. What can I do to increase my revenue? Is it maybe taking out a specific vendor and building more of a relationship with them and, maybe splurging on a nice dinner with them? Is it investing in marketing, investing in advertising, doing a podcast that 200 people watch? Is it what
220 actually is growing.
We are getting like 1,000 views per
Listen, I'll
episode.
take whatever. As much as if we help one person, worth it.
Definitely.
Right? But yes, that is the worst reason for you to go ahead and start spending larger amounts of money if we're talking a G-Wagon, because I just want the write-off.
Yeah.
Right? It doesn't make sense for you to
backwards.
Right, spend money to get the write-off when you could say, well, if I spend this money appropriately to grow my business, well, then now I'm going to be making that much more. And then those write-offs will start to really make more sense as you continue to build on. Yeah. I'm the perfect example of coaching myself or making every reason why the write-off does make sense, right? Like I'll convince myself that yes, buying the G-Wagon is important. Here are all the reasons why. And in reality, it's not really going to help as much as I think it will, right? Yeah. But you got to put those things down, right? Write all the reasons why, write all the other alternative reasons of where you would spend that money, and then weigh the options, right? Maybe having the G-Wagon and now you're at a country club and now all those clients that are there see you and they see you as someone who's successful, and maybe you're not necessarily there yet, but it looks like you are. And now you're getting bigger clients from that. Maybe that's one of the reasons why you could do it. But does it outweigh the marketing? Does it outweigh hiring another employee? Does it outweigh upgrading your website? Probably not, but that's up to you guys to decide.
And you know what? That's something that, when we get to that portion, I think that's something that I want to touch on too. So I want to table that thought because there is an importance in also rewarding yourself for all the things that you're doing.
Agreed, 100%.
Right? I mean, it's a slippery slope.
Yeah.
But it's definitely something to think about. The next thing is, what are things I can now take this excess cash and use to both strengthen my balance sheet as well as almost addition by subtraction, where, a good example of this is, say you have credit card debt. 22% rate usually is the APR. If you pay down that credit card debt, that's the equivalent of you investing in something that's going to give you a 30% return, because after taxes, you're going to be left with 22%.
Yeah.
So if you just avoiding the interest on a 22% note, that should be primary. Like, there is no such thing as good debt. People tell you, oh yeah, this is good debt to have. This is how you grow. It's like, yeah, okay, you use it to get to that spot, and then your number one goal should be, I need to get this debt off of my books.
Reduced.
Like, at least that's the way I look at it. There's plenty of billionaires out there that'll tell you different. But
yeah, I mean, look, credit card debt, you don't get deductions for the interest on a credit card debt, right? They're 22% at a higher rate. You pay the minimum, it'll take you 40 years to pay it off. Mm-hmm. So, it's important to look at what debt is what and what helps and what doesn't.
I agree.
But especially from a credit card standpoint, you're paying 22% and you're saying, well, I should invest in the market. Well, the return you need to make to offset the interest you're paying on your credit card, you're better off paying your credit card off, because that's a guarantee. I don't owe 22% anymore, right? So
yep. So now let's say we went through all these different things, and we're gonna try to get a little checklist for you guys too. So if you DM us and ask us for the checklist, we'll go ahead and forward you a copy of that. So on YouTube or Instagram, or I think we're gonna be on Facebook soon too. Ask us for it. We'll give you a checklist of these same things to go through before you do your planning. So now let's say you went through everything and you figured out what your number is, and this is how much your leftover profit is that you can, safely take out or keep in the business. How do you figure that portion out? There's a rule of thumb where people say you keep between 3 and 6 months of liquidity on hand for emergencies. Okay, your business should have an emergency account, and you personally should have a business account, emergency account, right? If you're at a point where you say, I don't have either of those filled up, take some money out for your personal if you need it for your personal, leave some money in your business if you need it for your business, okay? What are those emergency expenses? Your rent, your utilities, your living expenses, your staff's payroll. That's probably pretty important too. I think that may be tough for people when they start thinking about how much staff payroll is. But when you see people that run into issues, when you see businesses that file for bankruptcy or become very, very insolvent and things get really tough, it's because they're not leaving that buffer so that the owners have that 3 to 6 months to figure out when, things hit the fan.
Yeah. Well, and I'll say this. Some of you are probably saying, well, I got to pay my federal taxes, my state taxes. I got to do this, the estimated taxes. And now I need to make sure that I'm getting the payroll done correctly. Now I have this little money left. And now you want me to put it aside as a buffer.
And then we say, welcome to our world.
Right. But the reality is you're not there yet, right? If you don't have more than all of those things that we spoke about, then this year should be your goal to have in January 4 times what you have now. And that's money that you can project to use or project to spend on whatever you want to spend for yourself. But these things are things how a proper business is ran.
Yeah.
Right.
And if the money's not there, it's not there.
Every business has a position where there's either a troubling time period or a time period where you got to take 2 steps back in order to take 5 steps forward. Don't be the company or the business that get caught with their pants down because you wanted to be selfish at a time where your business wasn't ready.
Yeah. I
agree.
agree.
I think that's very important.
And, that doesn't now, that goes back to, all right, now you figured that portion out. You should take anything that's left over because now you've done all the right things. You funded your retirement. You've paid off your future expenses. You've put aside things for future income or expenses to lower your income for next year. And now you're at a point where there's still money left. You should absolutely 100% take that money out and enjoy yourself with it.
Yeah.
That's the point of doing everything you're doing, right? Take your family out, do something, go on a vacation, do something with it. Because there's too many times we see folks who have gotten too much into this mindset of I'm going to save every penny and save every dollar. And they've amassed this great fortune for themselves, and they've never been able to break out of that thought process of enjoy the fruits of my labor.
And now they don't know how.
Yeah. Now they don't know. They feel guilty or they feel bad.
And we're on the other side going, I know what to spend that money on. You give it to me, I'll help you. We'll go do it together, right?
Yeah.
I have an idea of vacation. I'll go with you. We'll all go together and I'll help you spend it.
Yeah.
But that's
I'll show
true.
You my Airbnb seat.
Yeah. Hop in my G-Wagon. I'll show you how to drive it, everything. You leave it with me. I'll take care of it. But that's true, right? Think of 20 years compounded of making sure that your business is run correctly. And now in year 21, you're like, all right, now I'm going to take a vacation. You don't know how. You don't know how to stop. You don't know, what direction to go in. And you feel guilty for doing it. So it is important to enjoy your life. We've seen even those scenarios where people spend all this time amassing this savings and then they pass away and then it's gone, right?
Yeah.
And then it was all maybe for your family. You don't have a family. It was for charity.
And then your family goes and blows it.
Right, your family blows it because they didn't have the work ethic you had. You do a whole episode on this. But those things are things that are important for you in the new year also.
Yeah, do all the right things and then enjoy yourself with the rest.
Yeah, for sure. So final framework, right, especially for this, is the IRS already owed this money, right? So for January 1st, make sure you no longer have a tax problem. Is the IRS already owed this money? Does this improve your cash flow or does it just reduce your balance, right? That's what we're talking about now, right? Does this lower the taxes this year, not last year? Does it strengthen or weaken your business? Ask yourself all of these questions before you take that first dollar out of your pocket left over from last year and make a decision with it.
And here's just one little thing to throw in there that I'm kind of shoehorning in at the last second. But we get this question all the time too. How do I actually take the money out? Well, it depends on your structure. If you're an LLC, you're an S Corp, or you get paid directly in your personal name, there's no steps you need to take. Go ahead and take that profit. There's no issue with you doing that. It's a distribution. It won't count as a deduction. It won't be an expense, but you're entitled to take that profit out without an additional tax. Okay, if you are a C corporation, you cannot do that. You cannot freely take the profit out of your business. You have to think of these things. You have to come up with your number. Then you have to declare a dividend. You will pay taxes on that dividend, or you could potentially take that excess amount and then issue yourself a salary as a bonus, and that would be deductible from your business and taxable to you personally. So if you're anything other than a C Corp, just write yourself a check. If you are a C Corp, talk to your accountant.
And if you didn't know any of those things, get a new accountant,
Yeah.
right? And you can click below and set up a meeting with us or find somebody else that you're talking to. But those
Yes.
things are very important.
Yes.
So everyone, welcome to 2026. We look forward to giving you a lot of good content.
Yes.
Hopefully we continue to grow along with you guys and your business. Thank
And give
you
us
for
ideas
watching.
of things you want to watch.
And give us comments. Put in the comments what you want to hear, things you want to see. Thank you for watching. We appreciate it. We look forward to another great year of content for you guys. Thanks,
Thank you,
guys.
guys.
See ya.